Hi there and welcome to my channel. In this particular video, we are coming to continue our discussion on our company valuation techniques. And as you may be aware, in my previous video, we looked at the three main business valuation techniques, including the DCF, public company comparables or comps, and the precedent transactions analysis. And in my last video, which was on the precedent transactions, I made mention of the fact that after you have determined the value, the share prices of your business as the value of the business you are planning to purchase or you are planning to acquire, what we usually do is we build what we call a football field chart in order to quickly get a glimpse of what the various valuation techniques are saying and what the business looks like at a glance. All right, so that is the purpose. In this particular video, you are coming to learn how to build the football field charts. And so if this is your first time on my channel, make sure you have subscribed to this particular channel. This is the Gen Z Analyst, and on this channel we deal with financial modeling, accounting topics, data and analytics, as well as related topics. So welcome to my channel. You can check out my channel pages to check out various useful videos that you can learn on financial modeling, in finance, in accounting, and of course in data analytics. All right, so what you're coming to do is to build a football field chart, and to do that we are going to make certain key assumptions. Now you might recall that we are actually on a financial modeling series using Amazon as a case study, and so that is what we have been looking at. But in my past two videos we took a different turn by looking at the valuation techniques, including comps and precedent transactions based on estimates. Okay, so we are not actually taking Amazon as a case study anymore, because this is actually the first time I'm dealing with these two valuation techniques on my channel. And so what I'm doing is to actually introduce you to these various valuation techniques, familiarize yourself with them before we take on a more complex scenario like our Amazon case study. All right, so that is exactly what you are coming to do. And so in this particular video we are going to make use of assumptions, all right, on a tentative company. And our company, our target, the company we want to value is called ABC Inc. That's the target company, called ABC Inc. So when it comes to building our football field charts, we make two kinds of assumptions. The first one is we can assume historical metrics. Now when you are dealing with a real world scenario or a real world case like Amazon, we would use these historical metrics from the financial statements of Amazon itself. All right, but in this case we are going to make assumptions because the company doesn't actually exist. And so what we are going to do is, based on our multiples for the various valuation techniques, we are going to assume these metrics. So when you look at our previous videos, we actually make these calculated these multiples, including EV to sales, EV to EBITDA, and then the PE ratio. And so given these, when given the revenue, EBITDA value or PE value of any target company, we should be able to obtain their enterprise value as well as their equity values. All right, so that is exactly what we are going to make under this assumption section here. So this is what I mean. We are going to have revenue for ABC Limited, we are going to have EBITDA, we are going to have EBIT, and then we also have net income. All right, so what values can we attach to? So for ABC Limited, we are going to assume that now these values are for 2024, and so in the year 2024, let's say that the revenue for ABC Limited or Inc. is actually 500,000. That of EBITDA is say 420,000. That of EBIT is actually 365,000. So I'm going to leave this pro forma file in the video description so you can download it and follow along. Alright, so do check out that in the video descriptions. Alright, then the last item here is our net income, and the net income, you can see this should be 300,000. Alright, so that's the first assumption. The second one we are going to make is market data. With the market data, we are talking about items such as our current market price. We are talking about number of shares. So number of shares of the company. We also have the market value, which is MV of the debt of the company, or the debts of the company. And then we also look at our cash and cash equivalent balance. Alright, so let's assume certain figures there. Now these figures are called market data because they can be obtained directly from the market. So for instance, if we are dealing with Amazon, we can also obtain these figures from Yahoo Finance or other online medium. Alright, so we can have our market price, we can put it at 125 there. Number of shares, let's put it at 10,000 shares. Market value of our debt, we can put it at 400,000, and our cash and cash equivalents can be 180,000. So let's put it there. So given these assumptions, we can use our multiples under each of the valuation methods to calculate our share price, okay, which is the value of the company. Now when you talk about business valuation, we are talking about the value we are assigning the shares of each share of the company. Alright, so the purpose of the valuation is to obtain a share price. Alright, that is the purpose. So under the comms, we are going to have our multiples, and so let's go to our comms valuation. And the multiples here are actually EV to sales, EV to EBITDA, and then our PE ratio. So these are the multiples we calculated, and we are going to use the average multiples down here, and so these three values. So let's come to the football part here, and so we have the first column here being the multiple name. The multiple names are the three multiples we just looked at, these three. Alright, so we have EV to sales, EV to EBITDA, and then PE ratio. So let's come back here and put the multiple names there. So we have EV to revenue or sales, is the same thing. Then we also have EV to EBITDA. We have also our PE ratio. Alright, now what are the figures? Those are the average figures we are going to use down here. So 3.6 times, 6.1 times, and then 9.7 times. Alright, so I'll come here and have so I'm going to have 3.6, 6.1, and then we will also have our PE ratio to be 9.7. So given our multiples and these assumptions for our target company, we can calculate the enterprise value of our target company. Alright, so what's the enterprise value going to be? For enterprise value, using the EV to revenue multiple, that is going to be the multiple multiplied by our revenue, and hit enter there. Then we can also calculate that of EBITDA. So enterprise value using EBITDA, which is following right under here. I can copy this formula down using Ctrl D, and then the last one is going to be the PE ratio, which we can also calculate using the net income. Okay, remember the E here is talking about earnings, and the earnings there is talking about our net earnings. So we have the multiple, which is the PE multiple, multiplied by our net income. So we can hit enter there. All right, and then I'm going to remove that. Actually, okay, so that is that for now. Let me actually remove all of this and insert it later. Then we have our net debt. The net debt is actually, as we already know, the market value of our debt minus the cash and cash equivalent. All right, that gives us our net debt, and this is going to be the same for the three multiples. And so we can copy this down using Control D. Actually, anchor this because it's supposed to be the same, so I can use F4 to anchor the market value debt reference as well as the cash and cash equivalent reference there, and then I can copy this down using Control D. Then we also have our equity value. So the equity value can be calculated given our enterprise value and the net debt. So equity value, as we know from the previous videos, is equal to our enterprise value minus our net debt. So I can copy that and copy this down using Control D. Then, given our equity value and given the number of shares, we can calculate our share price under the comps valuation technique. All right, so the share price is going to be equal to our equity value divided by the number of shares, which is 10,000 here. I'll anchor my number of shares using F4 on my keyboard so that it doesn't change. Enter there, and I can copy this down using Control D. And then now I can input my borders there outside, and then I'm going to do this and also this. All right, so that is that. Now, after calculating this under our comps, we are interested in the highest share price and the lowest share price. All right, so we are going to have high here and I also have low here. So let me delete it from here and cut this, paste it here, and put our low here. Okay, so for the high, we can use the max function to determine that. So max, and I'll use the tab to select it, and I can select my 3 share prices, close my parentheses and hit enter. And then for the low, I can have my min function, which is the minimum function, which returns the minimum value right there, which is the low amount. And so once again, I'll select all 3, close my parentheses and hit enter. So the highest share price is 200 and the lowest share price is actually 158, as you can see there. Okay, then the second valuation method is our precedent transactions. These borders there, so no border for now. So when it comes to the precedent transactions, the format is the same. We are going to have the multiples under our precedent transactions. So under the precedent transactions, we have these multiples. So we have EV to sales, EV to EBITDA, and EV to EBIT. All right, not PE ratio. And I explain why we didn't have that under my previous video. So let's come here and put those. So we are going to have, I can actually copy these two from here and paste here, and the last one is going to be EV to EBIT. All right, so that is what we want there. And the multiples figure, the figures can be these 3, 2, and then 3.2. So I can come back and input those figures. So we have 1.4, 2.2, and 3.2. Now I have demonstrated how we insert these times against our numbers. Just select these 3, go to Control 1, which is going to bring up the format cells here, come to number, which is the first item there, come to custom, select 0 and add X to it, select 0, open quote, add X to it, and hit OK or enter on your keyboard, and that will do what we do there. Alright, so given these multiples and again our assumptions, we can calculate our enterprise value, the net debt, the equity value, as well as the share price under the precedent transactions. So the enterprise value of the company is going to be equal to the under the EV to revenue multiple is going to be the multiple multiplied by revenue. So select revenue there and hit enter. Under our EV to EBITDA is going to be the EV to EBITDA multiple multiplied by our EBITDA value there and hit enter. And I can copy the formula down using Ctrl D for my EV to. Alright, so we can go ahead and calculate our net debt, which we have done with the comps. So this is not going to change, so I can copy the values from here and I can paste them here. Alright, since they are not going to change. And then for my equity value is going to be equal to my enterprise value minus the net debt right there, and then I can copy this down using Ctrl D. Then for my share price, again, this is going to be my equity value divided by the number of shares, which I will anchor using F4 and hit enter there, and I can copy this down using Ctrl D. Alright, then once again I can have my high and low values. So I'll have my high as well as low share prices. So for the high, I can use my max function. So again, this will be equal to max. Use my tab to select that and pick my figures, close my parentheses and hit enter. And then for low is going to be the minimum or the mean function. I use my tab to select that. Yes, close my parentheses and hit enter. Alright, so under the precedent transactions, we are seeing that the highest share price is $94.80, whilst the low price share price is actually $48. Alright, so again, let's insert our borders right here. I'll do it for this first, and then I can do it for all of this. So that is that for the precedent transactions as well. Now, ideally, we should be doing the same thing for the DCF valuation technique as well, but this is going to be monotonous, or it's going to be just a repetition of the same process. And since we are just assuming these figures, we are just going to assume the low and the high share prices under the DCF method. Now, the DCF method is actually calculated using two methods. We have the multiple method and then the perpetuity method, which we have looked at. And so when you are designing the DCF, you should actually do it for both ideally, to see which of them offers the highest amount and the lowest amount of share price. Alright, but in this case, it's just a simplified version of what you are going to do later, and so we are just going to assume that the DCF is calculated using the multiple method. Alright, so that is what you are going to do. So the next thing we want to do is the football field data table. This is the table that is going to be used to build our football field chart. Alright, so within this table, we are going to have each of the valuation methods. So I'll have my comps, I'll have my precedent, I'll have my DCF. And lastly, the extra one we're going to add here is 52-week high low. A 52-week high slash low. So the 52, we already know about comms, precedent, and DCF. The 52-week high low here is actually the movement of our share price in the last 52 weeks. All right, so what was the highest movement or what was the highest amount that the share price, or what was the highest share price amount in the last 52 weeks, and what was the lowest share price? That is what we are coming to do here. Again, you are going to assume those figures, but you can always obtain these figures on the internet. It's right there on Google Finance and Yahoo Finance and other popular platforms, as you may know. All right, so we are going to have our low values, and for the low we are going to have two columns. The first one is going to be for the bar. Now the football field chart is actually a clustered column chart, so you are going to be having bars or columns. All right, and so one of the figures is going to be for the bar, and then one of the low figures is also going to be for our label. All right, going to be for our label. And so I can do the same thing for the high. So we have high one for the bar and another high representing the label. Alright, so for comms and precedent, at least we have those values we have calculated above, and so we can simply insert those figures there. So for comms, the low price, share price, is actually this, so I can link that. And then the high share price under comms is actually 269. I can link that also as well. Then for the precedent transactions, the low price is actually this 48 here, and that of the high is actually this 94.8 right here. And then for DCF, we are going to make assumptions. All right, so for the DCF, the low we can assume $100. Then for the high we can assume 160. For the 52-week movement, high and low, so you're assuming that in the last 52 weeks or in the last 365 days, the weekly movement of the shares saw a low movement of 60, and then a high movement of say 110. All right, so that is that. Now for the label, it's going to be the same thing. All right, so we can simply copy this and also copy this to the right using Ctrl R. Now this is referring to 0, so we can just refer this to this. I also come here and make reference to this as well as this. Alright, so with our table setup, we can actually go ahead and build the football field chart. Now, as I've already stated, the football field chart is actually a stacked column chart. Alright, a stacked column chart. So what we are going to build essentially is a stacked column chart. Alright, so to build a stacked column chart, we are going to use the table as the source of data for building the chart, and that's the reason for why we built this particular table here. So what I'm going to do is to select the names of my valuation techniques and include all the figures, both the label and the bar figures. Come to my insert tab here, come to recommended charts, and under the recommended charts I'll select this stacked column chart here. Then I'll hit OK, and then I think this is OK. So let's move that to the football field chart section here nicely, and we can resize it. We can resize it nicely. And then the first thing I want us to do is to insert a title here. So the title is actually going to be share valuation chart. All right, and then I can select this once again and bolding that using Control B, and I also select any of the grid lines inside my chart. So select any of the grid lines and hit delete on your keyboard to delete that, so we can be able to view everything correctly here, and else here is fine. So what you are essentially doing is that you are going to make this to look like a candlestick kind of chart. All right, so let's select the top blue, light blue section here, and so this is telling us the high label, so as you can see, it has been selected, highlighted. And so what you are going to do is I'll right click this, come to format, open this box for me, and then I'll come to this fill and line here, come to the fill and say no fill. And then what I'll do is to come to this plus here, which is the chart elements, and add a data label. Okay, and the data label, I want to put it inside base right there. Okay, all right, so what we are going to do is for the low label as well, we are going to, let's check that. So this is the low label. So as well, we are going to change the value, but first let's once again change the fill to no fill, and we can insert label there as that. Okay, and the position is okay. And then the last one, we can hit, selecting these three, we can hit delete to delete those three, and this is going to give us a snapshot of the various valuation and their high and low value. So as you can see on our table, the high value for comms is 269, whilst the lower value is 158. When you come here, this is comms, this is 269, 158 for our 52-week high low. When you come to the table, this is 60 and 110 for low and high values respectively, as you can see here. So this is how we build the football chart. All right, then again, because we now have this, we can delete this, select this series thing here and hit delete, and also the line here can also be removed, but we can limit it like that. But as you can see, the chart is actually moving downwards, and so we can do a bit of formatting once again. So let's edit this vertical column here. So what I'm going to do is come to the axis options, and under the axis options, come to this axis option here, and the minimum is currently 0. Let's put it at the lowest value for our shares is actually 48, and so we can put our minimum bounds to 10. All right, and then the maximum can be let's make it 700 and see what we will get. Okay, so this has expanded our columns a little, and or let's make it this particular portion here. We can come to the axis options, and let's reduce it further to say, since the highest price here is 269, we can make it let's make it 600 and see how it will look like. So the 600 is also okay right there. So this is how we build the football field chart. So this is giving us the highest share price under. All right, so at the end of the day, when we are able to build the comps table for Amazon and value Amazon shares using the comps or the comparable company analysis as well as the precedent transactions analysis, we should be able to build a football field chart looking like this to be able to have a snapshot of the values that we have obtained under the two or under the three main valuation techniques. All right, so this is how we build the football field chart in Microsoft Excel. All right, so I appreciate your time in this particular video. I hope that you subscribed to the channel if you are new here, and don't also forget to like the video and share with others so they can also benefit. If you have any questions, you can leave it in the comment section and I'll do what to respond to them. All right, now you can also check my video descriptions if you are interested in obtaining a certification for financial modeling and valuation analysis. That is the FMVA certification. I have a cool deal in the video description from the Corporate Finance Institute, and so you can check that particular the description for details, and you can be able to obtain your FMVA certification. All right, so thank you very much. I will see you in my next videos.